Hi, my name's Anthony, and I'm a member of the Investors Underground community. I'm not a famous trader, I'm not mega rich, but I have been trading my own capital full-time for over 6 years now. The idea of this video is to explore some concepts related to finding your niche as a trader. And the goal is to help traders think about where they fit in the market, how they can find edge, how they can refine their process, and eventually expand their playbook. We'll start by defining niche as it pertains to trading and talk about some of the benefits of having a niche. Later on, I'll get a chance to speak directly with Nathan Michaud on this topic. So for our purposes today, we could define niche as the specialized area in the market where a trader focuses. And there are several benefits to having and cultivating our niche. For one, understanding our niche allows us to be much more comfortable in our trades, having been familiar with these types of trades previously. In addition, having a niche allows us to reduce our risk while increasing our chances of success in the market. There's other benefits of having a niche as well. Let's think about a couple of them: specialization and stock selection. In terms of specialization, it's important to remember that trading is a performance-based profession, and like other performance-based professions, we tend to find that specialization leads to significantly more success. Let's take, for example, a professional athlete. An athlete will train specifically for one sport. Similarly, in the case of a successful lawyer, they will train and practice specifically one field of law. And a doctor will practice one area of medicine, generally. Traders are very similar. By narrowing our focus, we're able to optimize our performance. Another reason that having a niche is important is that it allows us to reduce our stock selection. Remember, there's over 1,000 stocks that we could be trading every single day. Part of our job as traders is to filter out a lot of those and narrow down our focus to what works for us and allows us to pull out profits from the market. There will be a lot of different ways to approach a niche, and it's important to remember that everyone is unique and different in how they approach the market. Their personalities will affect what they're drawn to, what types of setups they look for, what sectors they might look at. Maybe they're a swing trader or an intraday trader. And so in thinking about a niche, it's important to remember that the niche that's right for you is the one that allows you to trade optimally, comfortably, and extract profits from the market. Having said all that, I now want to connect with Nate and ask him some questions and have a discussion about finding your niche as a trader. Hey Nate, thanks for taking the time to chat with me today about finding your niche as a trader.
Of course.
Let's just jump right in. From your perspective, why is it so important for traders to find their niche?
I think it's very important because that's who you're going to be as a trader. You need to find out sort of what works for you. There's so many times that people try to be a jack of all trades and try to do what everybody else is doing, do what everybody else has success with, but they never really take the time to think about what's best for them. So you're always chasing somebody else's hard work, but that may not make sense for you. And I see that a lot of times where traders are chasing maybe some successful young trader with no kids, no debt, happened to do well in 2020 on AMC and GME, and has got a lot to risk without really much to worry about. And here you are, a father or a mother of, 2 or 3, you've got to support them. You've got a house, a mortgage, all these different things. And you're trying to, chase after this. And you just have to really look at what works for you, and not what works for somebody else. And over time, you're going to take all these little things from different traders, but you have to always remember that it needs to be about you and what works best for the current situation that you're in. That may change. You may develop as a trader. You may start to do different things later, but you need to take it one step at a time and just continually reevaluate along the way.
Yeah, that makes perfect sense. I mean, everybody is different and they'll bring their own characteristics and individual traits into their trading. And so some people might just look on social media and see a very large P&L and think, "Oh, wow, I'll just copy that. That niche pays. This setup pays." Only to get into a trade like that and find out very quickly and in a costly way that it's not that easy.
100%. And the thing that a lot of people don't do is they don't see the risk involved with some of those. For example, like you said, the P&Ls that you see flashed up there by different traders. And I remember back in the day, Greg, LX21, which is a pretty well-known name in our community anyway. I remember him posting some major P&Ls back in the day, and everybody just is like, oh, how do I do that? I want to follow this guy and see what he's trading because I want that. But you don't realize, like, you skip over the 100K loss, the 200K loss, the all these other obstacles that took to get there to make the 4, 5, 7, or $1 million trade. People only see the positive. They only see these big P&Ls, and they don't understand the risk involved to actually get there. So again, everybody's got a different set of circumstances that they're dealt, and you just have to figure out what is the best way forward for you, and that is your niche.
What are some components of a niche, Nate, that you think traders can examine to get, some sort of understanding of what might work best for them?
Yeah, I think that you could either be a technical trader, a fundamental trader, a news trader, catalyst-driven trader. There's all different types of categories that you could probably, find, a trade to go into, and you just have to kind of find out what one you're best at and what fits with your personality the best. And then when you do that, you start to focus in, because one of the biggest changes that I've made is in finding my niche, finding what I'm best at, is just focusing on those, 1 or 2 trades per day, or however many come up, not forcing, not trying to do the same thing on 10 different names. And when you actually apply most of your focus or your energy towards these trade setups that you're best at, you're performing best at, you actually do a lot better, a lot less stress, a lot less headaches, at least for me. So being able to maybe try out a bunch of different things, but figure out where you have success. That could also be a long side, short side, thrown in there too. Do you find better success buying dips and selling in the breakouts, or finding the top? Well, not necessarily top, but finding near the top where it starts to fail, and then join the backside. And you can figure that out by trial and error. You can figure that out for free, by paper trading first, which a lot of people don't do. But being able to understand where you perform the best is half the battle, and then you kind of figure out which niche you're going to go after. And then there's always time to expand later, but continually keep going and going and going and going. Build that account as far away as you can from that starting point to give yourself the best shot. Because look, capital is obviously key, and if something is working, just keep doing it over and over until you're bored of it, to give yourself that chance to actually maybe not have your full-time job, or maybe take a step back and go part-time, or something like that, to give yourself more screen time to expand your playbook and become even better, next level, etc.
Yeah, I'm actually glad you brought that up, because I remember when I first started not understanding the value in paper trading. I was so eager to start trading live capital and getting into real trades that it wasn't until years later that I really sat and thought, oh, I actually could have went slower, had a better understanding of what stocks I like to trade, what setups I like, when to enter and exit positions, and spend more time on strategy and my niche. And I just realized this, so many years later.
You look back and you're like, where did all that money go? And people are happy to lose 500, 1,000, 2,500, 5, whatever it is, over and over and over again, just to have that action in the market. But you could find out if you're good at that or not for free. And a lot of people just totally avoid that.
Absolutely. And so thinking back for you, how did you eventually find your niche? Was there a particular setup that drew you in, or types of stocks that you were interested in? How did you eventually find what works for you? What gave you that eureka moment and really set it into motion for you?
Yeah, I think there's really two beginnings, because when I first started, it was OTCs, right? So then I kind of had to unlearn, or not necessarily unlearn, but relearn and redevelop as a brand new trader, because listed names are completely different than these little OTCs where what you think, and no matter what size you are, it doesn't matter. You're a small fry in these listed names, and you can lose very quickly when you're on the wrong side of these. So for me, the process of kind of figuring out what that is, how to learn, and what my best either category trade or niche trade is just, like you said, a little bit of trial and error, but more importantly, identifying where I wasn't good and where I kept on making the same mistake and eliminating that. And everybody always trades these big percentage movers because you see it and you want to double your account, or make 50%, or catch the downside move. But with these huge range names, the risk is extremely high. So I always was good at finding momentum both on the long side and the short side, but a lot of times I would overstay on things and make a lot of dumb decisions before a trend shifted. So for example, trying to find the top on the way up for a short, or trying to find the bottom on the way down for a long. And I've said this plenty of times, but at the time, I was trading exceptionally well, but there was always this one that would sneak up, whether it be once a week or once a month or once a quarter. And you kind of just, you're going, sit back, going, sit back. And if you could just avoid that sit back kind of trade, the exponential trend that I could have had, would have been so much better had I just eliminated that outlier kind of loss day. So identifying what that was, and quite simply, it was adding to losers on the front side of a move, before you see that turn, and whether it's on the short side or on the long side, before that actual turn is when you're most exposed to the most risk. And so once I put the brakes on and patient, let everybody else pay for that information. Let everybody else stop out. Let everybody else figure that out, get emotional, exhaust out. Even a little bit after that, that's when I finally start to get interested. Then I'll wait, and then I'll start to get in there. So that's been the biggest change for me in development as a trader, because that took a hard 2 years probably to work through, because as soon as you think you've got it under control, there's this new outlier trade that just kind of sneaks up out of nowhere. And it's after, what I've noticed, at least on the short side, it's typically after some exceptionally good short trades, back to back to back, where you could literally scale in, add. And it was just monster paydays. And then there's this other one that does all the same thing, and it swipes up. And then you're like, you know what? The other ones did this too, and then they ended up fading down, so I'll add some more. Then it does it again. You've got 4 or 5 times the amount of stock that you wanted short, and you anticipated maybe a 50 cents or a dollar risk, and here you are down $3 a share. And as you know, then comes the next three and the next three. So avoiding that action and avoiding the front side of the moves, or in the case of a long, avoiding trying to find the bottom, avoids that type of situation. And like I said, typically I see that it coming after your confidence is sky high because the last couple of days have been, phenomenal with opportunities, whether it be long or short, and you were rewarded for potentially being reckless, but it finally caught up. So that was the story of kind of me learning small caps and even the big caps of what not to do, what held me back from being really great. And once I was able to put a finger on it and stop that, things started to really pick up, click, and made some serious progress.
Yeah, one of the things that resonated with me there was that it's not so much what you're trading, but also how you're trading. The trade management, um, which I think is really important for traders to understand, especially newer traders. Another question I had, Nate, was in terms of when you were first trading, and finding your niche, how much input or how much influence did you have from other traders? Were you trading with folks? Did you have trading buddies, or were you more, lone wolf trading in a room somewhere? What was that like?
Yeah, early on, we had a whole bunch of traders, a big OTC kind of network, lots of different traders. Back in the day, it was like Yahoo Messenger and Investors Hub and different things like that. But moving forward towards like Nasdaq and things like that, I didn't really have many friends that traded Nasdaq yet. It was more of the OTC crowd. So I was kind of one of the first to venture over and just traded the apples and all that kind of stuff day in and day out. And then started to realize from seeing other people, quite honestly, I saw a big P&L posted. And then, you start to find out about StockTwits and this other world that's out there and these other traders. And you see something, you're like, wow, I didn't know that was possible. Because, my world was only this big. And then you start to see these other people making some serious gains, and it opens your mind up to what's actually possible. So from that point forward, I think FinTwit kind of was born with Twitter and all that kind of stuff. And at the time, I was blogging on my website just for free and kind of putting out the same research or watch list that I do today. What I was watching for the next day, what levels would interest me, and things like that. And then that kind of turned into what it is today. And so, you've got mentors and people that I look up to in the room that, I've kind of pulled, like when we first started talking today, you pull a little bit from everybody and you kind of figure out what's best for you. And that's kind of exactly what I did.
And I think it's fair to say that Investors Underground continues to keep that spirit alive by, making mentors and great trading, available to especially newer traders. Speaking personally for a second, I remember, finding you on Twitter, and it wasn't about, fancy P&Ls or how much you banked that day. You were giving updates about how you were getting short at the top of stocks when everyone else was talking about how they were buying at that period. And, the stock would soon go down significantly. And I remember thinking, how is this even possible? This guy's a really good trader. And so the Investors Underground, community is constantly showing me what is possible in trading, and some of the new additions that you have in the room, in terms of updates with certain market making or news. I'm seeing tweets in the IU chat room faster than they're showing up in TweetDeck. And for news type plays, that's really remarkable. That's, money in the bank sort of stuff if you trade those types of setups.
I give a lot of credit to everybody's that has helped develop it, create it, come up with the ideas. But I agree.
Getting back to this topic of niche, is there anything that you would recommend that traders do to improve their niche and hone in their skills, refine what they're currently doing in order to level up their trading? Any, back tests or anything like that you do or recommend?
Yeah, I think a lot of people journal. A lot of people do Evernote, and they do like kind of trade reviews. That's suggested by a lot of firms, like Mike Bellafury from SMB and Lance is helping them out, and they are very adamant about doing kind of trade logs, trade reviews. It's hard for somebody like me where I have a lot of trades going on. If I was doing 1 to 3 trades a day, then yeah, that totally makes sense. But I think it kind of comes back to what we were talking about in that niche or that category. So maybe you review and do stats on a particular strategy to find out how you could be better. But I think other things that could be helpful with stats like that, I can go in the back end and see, when am I terrible? Am I losing money pre-market and then I'm making it back once the market opens? If so, then why am I trading pre-market? There's stats that show you lose first, then you make. Another example is, maybe Mondays you always lose. Are you too excited from the weekend and you're ready to go and you just jump the gun? So that's good information that is not necessarily statistically driven, like 80% of the time I make money on this setup, things like that. But it's more of, things to be aware of. So I personally find that more beneficial. What price range do you perform the best at? What price range do you lose the most? Those are all different things that you can pull from that data. And you can either take it or leave it. But I mean, it could be something that one little tweak, changes where you're headed on the year. And so I think that's super important. But I think even beyond just doing some sort of journaling or review of that, personally, I go back through and look at my trades each day, what I could have done better, and what I did wrong. Drawing out lines and kind of, I should have known this here, or I could have done that there, and just not to beat yourself up, but like, how could you perform better for the next time? So I think that's important. It also, lately we've had a lot of these China type fraud liquidation plays, for lack of a better word. So a lot of Chinese-based companies with these cheap IPO prices, they go up. There's some sort of liquidity event, and then they just literally fall 85%. And by reviewing these and knowing and kind of seeing what similarities there were on certain plays, you can be that much more potentially aggressive or prepared for when it comes. And the more you're familiar with it, it's not the easier it is, but the more comfortable you are to go ahead and place that trade.
It makes sense that every trader will potentially have a different review style based on how they trade. And at the same time, every trader can and should review and critique and look to improve and refine their trading. Another question I had was, at what point would you say a trader can concretely say, I know my niche, this is what my niche is?
I mean, I think it's like consistency, right? So if you reach some sort of consistent, whether it's on a monthly basis, you're consistently positive, or a daily or a quarterly, whatever, once you can look back and kind of see that trend, we talked about this recently on a podcast, sometimes people have this one loss and then they just change, literally everything. And it's like, you just got here by doing the same thing over and over, and now you just had one little pullback and you want to just change it up. Look at how far you've come over the last, quarter, 6 months, or a year. And I think it's a similar situation here is, kind of look, how have you been performing? Is there proof that you get it? And if there is, then I would say, you can start to dabble, with starter sizes in the market, and then, progressively, move up from there. I think that's the best way. And for me, a lot of times, I always kind of look at where I performed, what type of setup is the best, whether it's just a parabolic short squeeze. I used to kind of be part of that parabolic move, but now I just, whatever the most popular one is, whatever everybody's talking about, I let that all happen. If I trade it, it's not going to be a lot of size for the first kind of trades. It's more about the backside for me. Once everybody kind of forgets about it, I'd rather pick up the pieces, and there's quite a bit of pieces left, believe it or not, after everybody kind of exhausts out.
I've heard a number of experienced, successful traders say very similar things, particularly those who look to short momentum plays. You know, give it 2 or 3 days or longer, the higher it goes, that means there'll be more downside to short at the end when it's exhausted.
Exactly. You don't want to be the only seller, right? If you're on the short side, you don't want to be the only seller on the way up, right? You want to be literally competing, like not filling, wishing you were getting orders, because that proves that you're on the right side. You're competing. Somebody else is like, I'm going to go lower. I'm going to go lower. And the unfortunate part about doing it on the front side is, you don't know how thin that's going to be, and you don't know how high and how fast it can go. So it's always, I personally prefer to see the whole transition, the whole exhaustion process happen, because I know that the market has now moved from maybe down here to up here. A large portion of volume has flipped. And now when it starts to pull back, I know that there's going to be this much more inventory up there, people on the wrong side that it has to plow through in order to make new highs. So I personally like, having that in my pocket on my side as a little bit more edge.
Another question I had for you, Nate, was at what point would you say that a trader should look to expand their niche?
I think going back to the level of consistency, if you found consistency in one, then start to explore. But I think it's really about getting as far away as possible from your starting point to give yourself the best chance that you can get, to the point where whether you have a year or two of your salary in your accounts from trading, or out of your accounts, something that is not because you did well at a job and you got extra cash and it's in your bank, but something, prove to yourself that you have consistency because you have money in your account that wasn't there. And I think that's one of the biggest, I would say, biggest things that I've seen traders do, make decisions based on, how much money they're making somewhere else, plug that into the market, and then, it's okay. It's a loss, but I'm okay. And then chase that loss with something else, and it just starts to, come apart. You want to have proof that you have a strategy, that you have actually taken money out of the markets, and it's either in your account or, in your bank account, whatever. And then start to explore different things. I feel like people are very quick to try to chase whatever's working for somebody else. And so I really think that, just be patient, and, you don't need to get rich overnight. It's a process, it's a marathon. It's not a sprint, that kind of saying, where, somebody's always going to make more. You've got to just stay on your, own path and just kind of look for those opportunities with where you found that consistency. And then once you're at a point where, you don't need to trade today, you don't need to make X, you don't need to worry about rent, and those kind of things, venture into, the next step and expand your playbook.
Yeah, that advice is golden, I think. You know, A lot of times I hear about people who are looking to transition their money into trading. And even speaking from experience, not having a niche before trading live capital, um, it seems like that's the hard road. In what you're describing makes a lot more sense and is more sustainable to understand your niche and find consistency, realize gains, and then look to expand what you're doing.
Yeah, and even like right now, I'm expanding my playbook with options. I'm not, I might catch some sweet moves, but I'm not taking much risk. I'm not, I could, but I don't know enough. I'm not familiar enough. I'm really about going through the motions and getting a feel for, how these things work. And before, I start throwing some serious money at it. And, it doesn't mean that you can't make good money off small, because there have been fantastic moves. Spy recently. I mean, if some of these bounces, you get on the right side, and these things triple, 5x, 10x very, very quickly. So I think that that's a great example of, I've been trading over 15 years, and I'm just kind of dabbling into options over the last year to try to figure out, where my edge might be, or where I need to watch out. Obviously everybody likes the 10, 20xers on Thursday and Friday, but, are you going to lose all your money, trying to do that? And then you finally get one, and it pays you back. But, I too am doing that same exact process, cautiously and carefully, kind of testing out a new strategy.
I think that's really helpful advice. I've noticed that expansion in your trading. I used to see you short a move and get a great trade, or go long and get a great trade. But in the past year or so, I've noticed, especially with the momentum names, you'll go long and catch the momentum. And then at the top, when the buying is done, short it and get go take the momentum back down, which is really impressive to see. And just goes to show that, you can always be expanding your trading.
Yeah, that was one big goal for me. Is my friend once had mentioned to me, like, why are you selling? Because you think it's the top. So why wouldn't you sell double, or why wouldn't you sell more than you have? If you think it's the top, then it makes sense that it would probably go lower. And if you're covering, why wouldn't you go long? So it makes total sense. And I've been trying to put that into the playbook as well, as you noted.
Right. And traders can always be adapting and expanding. And that gets me to my next question, which is, when the market changes, because that's inevitable, what could traders do? How do they adapt? How do they expand to stay profitable in the market?
I mean, that's happening right now, where a lot of traders are actually having a very difficult time right now, because we're in this kind of market where it's like, is it going to go this way or that way? All right, it looks terrible. Whoa, we're back to the highs, and so there's just such inconsistent action that it's hard to get conviction one way or the other. And so what I see a lot of traders doing is kind of getting too biased in any one direction. You were dead right. You were up nice, but then it's gone by an hour or two later. In this kind of market, for example, we used to have a lot of those full day type faders, where you have some big gap up on some news, and then it has it's a liquidity event for paper that they might have, whether it's the delusion, like an at the market, or something like that, where they can sell paper. They can sell stock that they have just waiting for a day like today with liquidity. And that used to be fantastic, and it would just fade all day, and you just get in and just let it do the work all day. But now there is just such a demand. There's even with delusion, there is a number of shares, and once that's maxed, it's maxed. And there's just so much demand right now, and traders are smarter. So there's so much supply coming from shorts, and it comes down. But there's also so much demand because of the number of traders now that when it stops going down, it actually starts to many times go back up. And then you get that intraday cover from, all those shorts that had come in. That's different than 6 or 12 months ago, where you literally just get a good average and, I'll see you at 4 p.m. And so a lot of traders have not adjusted to that or do not see the signs until after. And that's something where, a friend of mine continually does that same thing over and over. But if you review those charts at night, you would see like, oh yeah, that it's based there like 4 times, 5 times, 6 times, and then it swipes up. But yet you still were fighting. So I think that that's a great example of how you have to adapt in this current market. And if you don't, then obviously you're not making money.
This may seem like a simple question, but if a trader understands their niche, but on a given day there's no setups or no trades that fit their niche, what should they do?
That's the easy one. Just avoid them. Just avoid, I would say the best traders that I know, that I look up to, that I've kind of modeled after, they don't come to the market and hunt for a trade, right? They're waiting for that trade to come. They're monitoring the markets for a special situation. When the special situation happens, they're there providing liquidity, typically on the contrary. That's the situation. That's what the best do. They wait for these major opportunities, and then they just kind of sit back and just let the market be, because you're just going to waste a lot of time, trying to figure things out. A lot of times, I'll give you an example. People borrow shares, right, to short the stock. They feel forced to use those shares, because they paid for them. And it's the same situation. If the trade isn't there, why are you trying to find that trade just to use the shares because you had to pay for them? You're going to end up losing double, triple, quadruple because it's a subpar trade, but you felt the need to make that trade. And it's the same thing. Why? Yes, okay, this stock is going nuts, but you're here staring at it, just trying to find a trade to trade, rather than just say, okay, I'm going to let this thing do what it wants. I'm going to wait for a setup that I'm familiar with. And so I think that a lot of traders that have difficulty and they get chopped up like crazy, trade to trade. The ones that do exceptionally well, wait for the trade to come to them.
Yeah, that makes sense. It saves capital and it saves, mental capital as well. Similarly, what if a trader happens to miss their ideal entry? They have a setup, but they just missed it by a few minutes. What do you recommend they do?
There's always another one coming. I mean, we're in a ridiculous market, and every single day, there's multiples. So you're gonna pout about this one that you missed. I had one today where I'm hunting around for borrows and borrows and borrows and borrows, and just coming up empty-handed. There's minimal available, and it was frustrating because it would have been a banner trade, but it is what it is. And I'm going to go sit and dwell because I missed a trade that I could have made a fortune on, or am I going to look and get familiar with other trades that are setting up and wait for that opportunity to present itself? Which one's going to do you better?
Yeah, that makes sense. Again, to save capital and to prevent headaches, seems better to just wait and get a trade when it's perfect for you, rather than get yourself into a suboptimal setup and situation.
Yep.
And whether they're beginning traders or developing traders, how many tickers would you recommend a trader focus on any given day?
I always focus on 2 to size into, and that was a big change that I also made. I'm running around with my head cut off, trading 10 different names, no rhyme or reason to sizing. And I realized that if you just kind of figure out which ones are going to be your main focus, I never like to just focus on one. I had this conversation with Paso in the room. Some of you guys probably know P. Millie. And he was always just so focused on just one trade. And, if you're hyper focused on this one trade and that's really all you're counting on, and you're waiting for it to rebound, it never happens. There's your day, it's gone. So I always, and also your risk is so concentrated on this one name. So I'd rather spread that out to at least two, if not more. But as far as sizing, it's only going to be probably two names, unless I'm on the right side, with a huge padding, and then I'm letting it work. I'll venture off and sizing into more. But had the same conversation with Paso, and he started to go venture out to two or three names at a time. It reduces your concentrated risk, and if you get 2 out of 3 of them, great. If you're just trading that one name, it's either going to do what you thought or it's not, and you're either going to be pissed you just wasted your entire day, or you're going to be upset that you lost, or you're going to be happy that you made. It's better to find a couple that fit your niche and then go for it.
And if a trader finds themselves, having deviated from their niche and find themselves upside down in a losing trade, they've completely broken their rules. Maybe they're adding to a loser and they didn't cut it. They now find themselves with way too much size, maybe 3 times or 4 times the amount of shares that they would normally be trading. What advice would you give them?
Understanding where that trade would be right or wrong, I think is probably the most important part. But if you find yourself in a loser, it just depends. I'm in losers all the time, but I just don't scale into them. And so another one of those strategies that I've really been working to not perfect, but continually get better at, is scaling into those winners. And I used to, scale. Everybody averages down and scale into a loser, right? And then your max risk is, as you said, you're in 3-4 times the size you wanted, and then what? So always reevaluate. If it breaks down that support level, have I added too much? Then size back down. Is it doing what I thought? Great, then scale up a little bit. If it's not doing what you thought, then scale down. You can always add, and it's a lot cheaper many times than overstaying with too much size. People are afraid to pay, a couple bucks commission, but they're happy to lose, 100x, being wrong on the, compared to the dollar that they would have had to spend on adjusting their size. So really it's reevaluate every step of the way. Every big move that happens, reevaluate every volume bar, that kind of stands out, any outlier action, reevaluate. Is this starting to be a little bit 50-50? I did that today alone. I had 2 positions that I scaled into. I got into basically the full size that I was going to have. I was letting it work. I was on the right side. And then midday, they kind of came back up. They were starting to go a little bit sideways. And it was like 2:30 p.m. And I was like, if I don't take this off now, then I'm either going to get caught in the squeeze, or it might go lower, but I can always kind of react. And it's 50-50. And so there is no edge. Yes, I had a padding, but there's no edge anymore. So do I reduce risk? And that's what I chose to do. I ended up reducing risk to, I probably shaved off 75% of the positions. That way I could rescale, later on if I was right and continue to go down. But they ended up both holding, and then I took off the remaining when I reclaimed VWAP, and they both squeezed into the close. So it was, realizing that at this point it's going sideways. I reevaluated the situation. My edge had now shrunk. It was not on my side. So while I still had time, I made the adjustments. And I think that a lot of us, want to see what we want to see happen, and we wait for that until it's too late, and then you're making emotional decisions as it goes the opposite way.
Are there any final words that you'd like to give for everybody out there, on the topic of niche?
Yeah, I think that it's always important to make sure that you are, developing and building a better you. Be the best you that you can be. I say a lot, and that's because it's important to focus on just that. Too many people are focused on so many different outliers, and what they're doing, what they're doing, and I think that you should really find out what you're best at and what works best for you. Like I said, to start, if you're competing against this 22-year-old dude that's got, no strings attached, that just crushed it on a couple of meme stocks and turned into a great trader, versus you've got, a mortgage, a couple kids in school, and, you're trying to be a good either mom or dad. You're not going to be able to compete with those younger kids that are doing this intense research, until midnight, and literally having no life, but changing their life. Sure. But you can't do that as somebody with kids and a family. So you have to figure out what lane, stay in your lane, figure out what's best for you. And really the more blinders you have to, all these other I guess things that are going to pull your attention away from what's important, the better. The more blinders you have, the better. But focus on what you're best at, and just keep doing that as long as you can, getting away from that starting account value. The reason why people don't make it in this is because they don't have enough capital, and they lose it. Once they start making a little bit of money, they venture off and try to do what works for somebody else and then take a haircut, right? So, keep doing what you do best and just stack as much as you can in your accounts, because that's going to give you the best chance, at being successful at this otherwise very difficult job.
And again, thank you, Nate, for taking the time to speak with me today and answer all of these questions related to finding your niche as a trader.
You bet. I appreciate it. Thanks for having me.
If you liked this video, don't forget to hit the like, subscribe, and notification bell. Thanks for watching.